Hello everybody, Randy Patrick here. Time for Housing Bubble 2.0 News of the Week, or as I like to say, another episode of As the Housing Market Turns. Today's information, I just want to do a quick and dirty video here. Didn't have much time to prepare, but I wanted to get the information out in a timely fashion. So NAR, which is the National Association of Realtors, released their existing home sales report for April 2019. And just want to head into that right now. Basically, we saw a 0.4% decline in sales month over month, so comparing April to March. And also we see a 4.4% decrease year over year compared to April 2018. So definitely some slowing and a little sluggish sales. This came in less than was expected by some of the predictions from some of the analysts out there. Median sales price came in at $267,300, about 3.6% increase year over year. Our inventory grew a little bit. We are now at 4.2 months worth of inventory, and it was 4.0 months in April. So we saw a little bit of an uptick on inventory, which is great. And of course, the notation from NAR is that they consider 6 months of inventory is considered a balanced market that equally benefits both buyers and sellers. There you go. So that's how it worked out. So we got a little bit of a dip here, which is interesting. Now, the regional breakdown, Northeast numbers, they decreased 4.5% compared to the month before, and 4.5% year over year, so decline. The Midwest, what do we got here? 7.9% below April 2018's levels, which is interesting. No change from the past month to month. Existing home sales in the South dropped 0.4% in April, down 1.7% from a year ago. And existing home sales in the West actually grew 1.8% compared to March from April, but it's 5.9% below the annual growth rate a year ago. So there you go. So we see some slowing down and some shifting going on in the marketplace right now, which is not to be, you shouldn't be surprised at all. Just to delve a little deeper into this, I've got the whole NAR report here. And, we're looking at, again, about, 4.4% change year over year. And it's basically like, I think it's the 14th or 15th month now in a row that we've had annual sales declines per month, like year over year, looking back from April 2019 to April 2018. That's a year over year difference. We see a decline, and those year over years has been a trend for about 14 months now. So obviously, plateaus there, trending down. As far as the breakdown market conditions of sales, so when you take a look at the sales across the board, 32% of the sales went to first-time home buyers, 16% of sales went to investors, 20% of sales were cash buyers, and distress sales only accounted for 3% of the market in that would be in April of 2019. Out of that 3%, only 1% can be attributed to short sales, so I guess the remaining 2% would be bank-owned REO. So again, 1% of the market across the country is short sales, everybody. Existing home sales by region, obviously the South led the way with 44%, followed by the Midwest at 23%, West at 21%, and the Northeast the slowest at 12%. So again, supply, we're seeing supply kick up a little bit to 4.2 months now, which is a good thing. Sales by price range. So this is where we're really starting to see some issues. Back to the affordable housing, it's the same thing as last month as well too. We all know this. The bulk of the sales are required, 250 and below, and it's just not happening there. So it looks like 0 to 100K sales range, 9% of the business. 100 to 250, 38%. 250 to 500K was 37%. 500 to 750, 10%, and anything above 750 to a mil, 3%. So ultimately, in the end, the bulk of the deals are being done in that 100 to 500 range. Obviously, the 100 to 250K is the segment, which was referred to as affordable housing that needs the most inventory, and it's not getting it, unfortunately. So therefore, when we take a look at the 0 to 100K and 100K to 250K, that's where the percent sales change. So they're dropping. So that sales area or that range of homes are having less sales because of less inventory and less volume in that demographic price range category there. So that really hurts the marketplace essentially, and it's causing some problems. So just giving you guys a heads up on that. Now, Interesting enough, though, the comment has been disappointment because interest rates have dropped, and I guess that's kind of like everybody's using that as a tagline, like, but a sizable drop in mortgage rates didn't do much to help home sales in April. Okay, but home sales underperformed despite having low interest rates, despite competitive interest rates. So there's not a few weeks before, maybe a few months before, people were of the mindset that interest rates are driving the home purchase market. Maybe that's not the case as much anymore. Sure, it has some factors involved, but as we said before, I think there are a number of factors at play here. Buyer fatigue, affordability, wage, consumer confidence, people unsure what they want to do, people obviously wanting to see some more reductions in price before they pull the trigger, and that's what I really believe people are waiting for right now. So again, interesting enough. So Trulia had a report that basically said this national shift is from a seller's market towards a buyer's market, is playing out locally in the most expensive neighborhoods within a metro area. On average, zip codes where home values are highest, more homes are being sold further below their asking price and selling more slowly than they would otherwise. Yes, we realize that. It appears at the top of the market, luxury homes, higher end homes are getting hurt the most. Again, longer on market, most price decreases, etc. So it's tougher to move those properties, clearly. Now, conditions in 50 of the largest metros are now shifting in favor of buyers. And according to them, that's a tenfold increase. So really, it was just 5 metros that had a buyer's market last year. And now we have 50. So that's a tenfold increase, which I think is pretty interesting. Excuse me, a little dry. Little allergies and stuff going on here. But again, so essentially half the markets now are shifting, at least of the 100 largest ones, are shifting in favor of buyers. So if we don't quite see inventory balancing out yet, we're at least seeing the markets starting to balance out as well too. So we got half the markets buyers, half the market sellers favor. So that's going to be changing. And apparently Las Vegas shifted the most away from sellers and towards buyers over the past year. From the 3rd worst market for buyers a year ago to the fifth best today. So very interesting to note that. San Francisco, of course, things are changing, values are changing. Apparently San Jose in that Bay Area, actual values and sales falling 2.7% from last year. Bay Area is leading the way for having the decline in value. So that's what's going on there. Again, not all doom and gloom, but we see a lot of interesting things going on in the San Francisco Bay Area marketplace. Washington, state of Washington, according to the Northwest Multiple Listing Service, I guess you could say home prices for completed sales in April rose 2.4% across the 23 county system. But 6 counties did see year-over-year decreases. Condos within King County saw a particular fall. It says while across the MLS counties, condo prices dipped 3.2% as inventory jumped 75% across the board. Within King County, those prices dropped 9.6%, with inventory surging to 122%. So again, we see in certain segments, certain property demographics, property style, obviously more inventory, maybe it's overbuilding, maybe it's just it's sellers wanting to cash out now, etc. So again, we see a decrease in sales and a huge jump in inventory, which to me is telling there. So again, just keep that in mind that we're going to start to see in here, we'll call it these areas, these counties or subsets of cities and markets that are starting to see some shifts in their trends. And it's almost like we're going down to the metro micro level now to see what's going on, and that's going to be telling. So not every market can buy and sell at the same pace, can have the same appreciation or depreciation, but as an overall trend, we know that it's sort of peaked and it's starting to work its way down. Now we're seeing like a San Jose, Seattle areas, whatever. We're starting to see either a market or parts of a market starting to point south, go down negative, and that's going to start the drag on everything else, which I think is interesting. So there you go. Let's talk about something else here quickly. Again, not a very long video, just really quick today. Builders bet too heavily on the upscale market. So this is very interesting as well, because this is from the Orange County Register in California, and basically the Southern California builders now are stuck with the largest supply of unsold homes in the past 7 years. They've slashed their construction pace to the lowest level or slowest pace since 2016. And it shows that this thing called Metro Study shows 3,750 new homes went unsold in the 4 counties covered by the Southern California News Group, and an increase of 688 units in a year, or 22%, and up 37% for the 5-year average. It was the builder's largest inventory of unsold units since 2012's first quarter. So think about that. 2012, we were coming out of the trough, working our way up through the appreciation, and the builders had the most unsold units there, and now we're sort of at that level, at sort of our past market peak now. Very interesting. Again, according to CoreLogic, 2019 started with 25% new home sales were down 25%. And again, the whole point is that builders bet on the upscale market, which has been hurt by a major pullback with respect to many foreign buyers. They quote mainly Chinese buyers. The more affordable parts of the market have been slowed by higher mortgage rates. So really, new home construction builders are getting beaten up on kind of both ends. But obviously, if they've gambled on the high end, it's not very good. Now, this is where things become interesting, and this is exactly what happens in bubbles. So, see, builders are going to build and have inventory because when they started this process, the market was growing, it was hot. They foresaw everything was going to keep going up, etc. So development money is going to come into play, and development money is easy to get when things are good, forgetting the fact that, guess what, at some point in time, building slows down and we can't keep up with the prices. Well, because there's been a surge in existing homes listed for sale, which means increasing options for home buyers, house hunters, the 4-county Southern California region had 35,000 plus listings as of May 2nd, about 6,300 more than a year earlier, or a 22% increase. So right now, having 22% more homes on the market, like existing resale homes, certainly provides a buyer with more choice. They're going to look here, they're going to look at new builders, and we traditionally know that the average resale home is typically a little cheaper than a builder home. And the obvious reason why the resale home is older, it's got some deferred maintenance, it might need some work done, some change up here and there by the buyers. If you're a new buyer, you're walking into a turnkey situation with a new home, and it's built the way you like, or it's got the most nicest features for the demographic and the market today. And again, you have no maintenance when you jump into it. So clearly, new homes cost a bit more. So we're now seeing how this is going to impact home builders as time goes on. So I would expect that, again, they're going to be slow with the deployment, slow with the new builds, and they're probably going to have to do more radical things to move their product, which would be still, again, further slashing prices. We saw last month that the prices dipped pretty dramatically, about 10% down year over year. We'll probably see more price decreases. We may see builders offering, package things where they're throwing in more upgrades, more features. Don't forget, a lot of builders also have their own kind of sales arm, closing company, mortgage company built in as well too. So they can bundle a lot of the real estate sort of sales and closing services into their overall sort of product mix, which means they can possibly offer other discounts, which in the end, if they discount over here, they're going to make it up on doing the title work and doing the closing and maybe doing the mortgage. So they know they can play a bit with what's going on out there. But I just think we'll see more of this as time goes on. But apparently, again, 22% increase for listings in Southern California, and that's really affecting the builder units now. So that's the way it goes. So anyway, guys, that's it. I just wanted to catch this as being sort of fresh news for today. It's kind of my goal to get news out as quick as possible. Later on this week, I'll start running down more of the individual marketplaces. But kind of as a whole, I'm not seeing as much direct information about hey, Dallas is up or down, or Denver, or whatever. I'm just seeing more generic stuff that hey, buyers are doing this and the market's plateauing and we're starting to see more inventory coming on. That tends to be the discussion points for most of the information. We see higher end developments slashing prices. We see higher end developers pulling stuff off market. There's a concern about overbuilding. What we also see, which I think also is trending at a housing bubble time, is a lot of the mega mansions. These are people that are putting up $20 million, $40 million, $100 million mansions, and property up for sale, they put it up there. And again, we know that there's really only a small segment of buyers that can afford, that fit into that demographic, that can purchase those type of mega type properties. But when you start seeing somebody who's listing their property for $40 million and they're dropping it by $8 million or $12 million, you know that the market's hurting as well there too. So even though you got tons of cash, you don't want to overpay for something as well. And that's where I laugh when I see some of this stuff, but more and more people who speculated and gambled on, the big estates and building these mega mansions and all the bells and whistles, whether it's California coastline, Central Texas, or Manhattan, condos / high rises, etc. There's Billionaires Row, things like that. That's what happens, that these higher end homes tend to take the most discounts and take them the hardest first, and then there's a trickle-down effect. So we're seeing that right now. It's going to work its way down. Clearly, the affordable housing segment, is not really seeing a huge price decrease at this point in time. It's kind of maintaining. I think there's an overall erosion of price. It boils down to inventory. More people are going to buy in that price range, so it'll always be strong. We need to get more inventory out there. We're limited as to what we can do. Clearly, we know there's places we can go to get it. It's a matter of us actually doing the work and providing the inventory to the public. If you want to know more about how to do that, contact me. I'll show you how I do it and what's going on with today's market. So having said that, appreciate the likes, the comments, the views. Also, if you like what you hear from me and want to hear more, please subscribe, help my channel grow. And again, I'm always ready to answer questions and help people along the way. If you want to know more about real estate product, investing, shadow inventory, where you can find homes that are cheaper, that are off market, that's kind of what I focus on. And I think that from a retail buyer perspective, a lot of buyers over the past year have sort of gone down that path where you're looking at MLS, you're looking at Zillow, you're looking at these third-party applications and sites, and maybe you're not seeing what you want, or you're not seeing price points that you think is cost effective for you, and that's fine. There's a whole other segment of inventory that's not being discussed out there. Might take you a little bit of work and hustle to get those deals, but in the end, nobody's messing that marketplace, and you can get significant discounts when you work the distressed property market. So again, thank you very much, guys, and we'll look forward to speaking with you later on this week. Bye-bye.